From April 2027, your pension could be getting hit with inheritance tax and income tax on death. And as a financial advisor, this is a question that I'm frequently asked, especially with the new changes coming into play in April 2027. Will my beneficiaries have to pay both? So firstly, let me explain what's changing. So currently, pensions are classed as outside of your estate for inheritance tax purposes. So if you pass away, your pension will not be included in the calculations to assess inheritance tax, and your pension will just pass to your beneficiaries completely free of any IHT. Now from April 2027, that's completely changing and pensions will be included in your estate for inheritance tax. So if your estate, including any unspent pensions, goes over your allowances for inheritance tax, then the excess would be getting taxed at 40%. Now it is worth knowing that not all pensions are in scope for this, so any defined benefit income continuing to a spouse, any annuity income that's already in payment, or any death in service lump sum benefits are outside of the scope for this. Now let me just clarify the position on income tax if you pass away, because this hasn't actually changed. So if you pass away before the age of 75, then your pension benefits can usually be paid out to your beneficiaries completely free of any income tax. After 75, they will be subject to income tax at their marginal rate. So as you can see, from 2027, you've potentially got two taxes in play. You've got inheritance tax and then income tax if you have passed away after the age of 75. So this is clearly raising the question among a lot of people, am I going to be double taxed on my pension? And the answer is potentially yes, because you could be getting IHT on any portion of your pension above your available allowances, and then income tax on the rest if you do pass away after the age of 75. Now, HMRC have brought in a mechanism to avoid the same portion of pension getting hit with inheritance tax and income tax. So if the pension is used to pay some IHT, then that specific segment will not be subject to income tax as well. But let me show you what I mean by this. So let's say, for example, you had a £400,000 pension pot on death, but £150,000 of that was used to pay IHT directly to HMRC. In this scenario, you'd only be suffering income tax on the remaining £250,000. So you wouldn't be suffering income tax on that full £400,000 pension pot. If the beneficiary did draw money out of the pension first to pay IHT, which might be the case for some people, you can also claim back any income tax that was suffered. And if the beneficiary is a higher or additional rate taxpayer, then they'll be paying more than 40% tax on any income they draw from this remaining chunk. So you can see after both these taxes apply, there's going to be a very big chunk taken out the pension. And this is why if you do think you are going to be impacted by these changes, it's always best to speak to a financial advisor to see what you can do in your situation.